Geographical of U.S. The United States share land borders with Canada and Mexico, and maritime borders with Russia, Cuba, the Bahamas, and other countries in addition to Canada and Mexico. The northern border of United States with Canada is the world's largest binational land border. The U.S. government is a representative democracy with two legislative bodies, the Senate and the House of Representatives. The Senate consists of 100 seats with 2 representatives from each of the 50 states. The House of Representatives consists of 435 seats, the occupants of which are selected by the people from each of the 50 states. The executive branch consists of the President, who is also the head of government and chief of state. The U.S. also has a judicial branch of government that is made up of the Supreme Court, the U.S. Court of Appeals, U.S. District Court, and state and county courts. The U.S. is comprised by 50 states and 1 district, Washington, D.C. The U.S. has the largest and most technologically advanced economy in the world. It mainly consists of the industrial and service sectors. The main industries include petroleum, steel, motor vehicles, aerospace, telecommunication, chemicals, electronic, food processing, consumer goods, lumber, and mining. Agricultural production, though only a small part of the economy, include wheat, corn, other grains, fruits, vegetables, cotton, beef, pork, poultry, dairy products, fish, and forest products.
What went wrong with the US economy? There are too many poor people in the problem with the US economy. If your income and wealth scale in the US are in the top 1%, 5%, or 10%, that means you are economically successful and doing well in the US. Michael Fass said, "It's easy to hate the rich for all that they have and all that they don't, but the rich are not the problem. The rich people who exist today mostly have become rich over the last decade, and they are even getting richer day by day. They have become good at being rich. They buy expensive houses and cars, but they have not created enough jobs to have a noticeable impact on the economy." The US economy is the world's largest, and 70% of it grows due to consumer spending. If the consumer economy grows, then consumer needs more money to spend. The problem is that the super rich cannot spend all of their money, while the poor and middle class don't have enough money. The government policies that help save the economy have created a surge in asset prices, which have made the rich more wealthy but have not done much for average American. Since the 2008 financial crisis, the U.S. government and the Federal Reserve have been pouring trillions of dollars into the economy to prevent a deeper recession. Among the efforts are made a large deficit spending and liquidity injections.
How the mortgage defaults affects the U.S. economy. A subprime mortgage is a housing loan given to a borrower with an impaired credit history. Usually, the borrower have no credit history at all and problems with that. Their credit scores do not allow them to get a conventional mortgage. People with such a bad credit history often have a big difficulty getting a mortgage agreement, and therefore the monthly payments have much higher interest rates than usual because lenders view the loan as more risky. When you cannot afford the monthly payment anymore, it is called mortgage default. This is what happened in the United States at 2007. Panic and financial turmoil had attacked around the world when U.S. economy started a mortgage crisis. The financial markets become very volatile, and the effects last for several years or maybe more longer. The subprime mortgage crisis is the result of overpriced and float loan modeling, largely based on the assumption that house prices are just going up. Great indices also play an important role. In the early to mid-2000s, interest rates on house payments were quite low. More people who struggling with credit were able to have an agreement for subprime mortgage, according to a brief early 2000 decision with manageable rates. They are very happy with the subprime mortgage, due to the Federal Reserve decision to lower the federal funds rate To drive growth, the subprime mortgage have increased suddenly. Many people take the chance seeing who could not afford homes or get approved for loans were suddenly qualifying for subprime loans. Because of that, American home ownership grows rapidly. Not only subprime borrowers that caused the real estate purchase rise, but wealthy Americans are also one of the factors. Investors who got burned by the dot-com bubble of the early 2000s and need a replacement in their portfolio start investing in real estate as price increase, and people expected the price will continue increase. The number of subprime mortgage issued is increasing due to housing prices are rising quickly. The Federal Reserve raised interest rates more than a dozen times in an effort to slow them down and avoid serious inflation from 2004 until 2006. By 2005, some people would begin to fear that this was a housing wave. The interest rate at the end of 2004 was 2.25%, while in mid-2006, the interest rate was 5.25%. This cannot stop the undesirable and show that the bubble burst. The housing market collapsed in 2005 and 2006. Subprime mortgage lenders are starting to lay off thousands of workers, if not file for bankruptcy or close down completely. Due to these crises, the U.S. economy are affected. To buy and sell mortgage-backed securities, hedge funds find that they can generate a lot of money, the value of the underlying mortgage cost of this derivative. When financial services began combining subprime mortgage with high-quality conventional mortgage, the hedge funds become popular. Tranches, which is when the banks divide these bundles into different components. All the low interest payments from the first 3 years of the subprime mortgage in with the low interest payments of conventional loans are put along together by the bank. Payments with high interest are combined into several parts that seem to be more risky because of the high yield. In addition, a default credit exchange where the insurance against any default are sold. Banks need more and more mortgage to meet demand that call the popularity of mortgage-backed securities. To get more business book, banks make these exotic mortgage especially for the purpose. They bundled the mortgage and sold them to hedge fund dealers. All going smoothly until in 2006. In 2006, the housing price started to fall. This incident is rarely happen in US history. In addition, the incidents happening at the same time many borrowers find their interest rates increase in the third to fifth years of exotic mortgage. Because their home is now worth less than a mortgage, they are unable to refinance or sell the home. Owners of mortgage-backed securities realize their derivatives are not worth what they paid for when they start to default. The issuer, American Investment Group, AIG, nearly went bankrupt as they tried to collect their insurance. This led to the financial crisis in 2008.
Problem with bailing out financial sector. In this topic, we will discuss 6 problems over the past century that required government intervention. First, the Great Depression. The Great Depression is called because of the prolonged economic decline and stagnation triggered by the stock market downturn in 1929. After President Franklin D. Roosevelt in 1933 has been selected, the government created several planned President Rescue Programs to provide relief to the people and business of the state. The unemployment rate approached 25% during the Roosevelt tenure. Many Americans who lost their jobs are also lost their homes. So the population of homeless is increased, particularly in the city areas. As the solution, the government makes the Homeowners Loan Corporation. The program would buy default mortgage from banks and repays them at a lower price.
Fortunately, the program has helped 1 million families benefit from the lower rates on repaid mortgage. The government held the mortgage until they were paid off because there was no secondary market. Besides, the government also created several other programs to help the country overcome the Great Depression. Even though the programs were not successful to bail out the problems, but they still provide money and enough to create thousands of new jobs. For example of the projects is building a harbor dam, repairing roads and bridges or building new ones if needed, hiring artists to paint murals at the new post office, and hiring writers to author state guidebooks. Furthermore, the Treasury Department also has an access to purchase until $250 billion of bank shares. The purchase would be given to the financial institution as an adequate capital. The department bought $20 billion of bank shares in Bank of America and Citigroup respectively. Then, the department sold back those shares to get a profit. The government gave assistance of TARP amounted $245.1 billion to bank and get back $275.6 billion as the profit of investment amounted $13.5 billion. Congress has approved the Emergency Economic Stabilization Act of 2008 as an initiative to address the crisis. Troubled Asset Relief Program (TARP) exists due to the Act. The program gives access to the U.S. Department of the Treasury to purchase up $700 billion in toxic assets from companies. The companies then could refill their balance sheets with more secure assets. Furthermore, the Treasury Department also has an access to purchase until $250 billion of bank shares. The purchase would be given to the financial institution as an adequate capital. The department bought $20 billion of bank shares in Bank of America and Citigroup respectively. Then, the department sold back those shares to get a profit. The government gave assistance of TARP amounted $245.1 billion to bank and get back $275.6 billion as the profit of investment amounted $13.5 billion. Besides, the Fannie Mae and Freddie Mac problem. Due to the implosion of housing market, Fannie Mae and Freddie Mac, which is the two government-sponsored enterprise that has been assigned to promote home ownership by giving liquidity to the housing market. In the housing market, Fannie and Freddie play a major role where they buy the mortgage from lenders and assurance of loans. At the peak of the financial crisis in 2008, Fannie and Freddie have responsibilities in $1.2 trillion worth of bonds and in mortgage-backed securities worth $3.7 trillion. They could not service their responsibility since the finances are decreased. Fannie and Freddie are put into conservatorship by the Federal Housing Finance Agency, who set up both enterprises. The Treasury Department provides $119.8 billion and $71.7 billion to Fannie Mae and Freddie Mac respectively in order to keep both solvent. They need to pay the dividends to government first compared to all other shareholders. Fannie Mae and Freddie Mac has paid $176 billion and $117 billion respectively to the Treasury Department in the 2018. The Treasury Department has longer the time of the lifeline to give both of them to clean up their finance. Between 2007 and 2011, both of them reported losses, and in 2012 they managed to make profitability. Fannie Mae reported in 2018 of earnings worth $16 billion, while Freddie Mac reported $9.2 billion. Then, the bear stearns. The looseness of mortgage caused a bad effect to Bernstein, which made the Federal Reserve to intervene in order to prevent it from destroyed in 2008. Bear Stearns, which is like Bank of America, Citigroup, and AIG, does not expect it to fail because it's like a giant company. Federal Reserve decided to combine the Bear Stearns and JP Morgan Chase. The Fed became the first to provide the bridge loan that worth $12.9 billion, which was repaid with interest in order to make the combination become easier. To buff the financial asset from Bear Stearns, the Fed had lent a Delaware corporation that was $28.82 billion. By selling off those assets, the corporation made the money to repay the interest and principal of the Fed. The corporation managed to pay back the interest and principal of the Fed amounted $765 million by November 2012. Assets worth $1.7 billion are still held by the corporation as at December 2014, which would give a profit to the Fed after they are sold or mature. The second last is the American International Group, or AIG, that has been controlled by the government when the financial crisis happened. This action has been taken to avoid the fifth-largest insurer in the world threatened with bankruptcy. The derivative that lost by surprise had been accorded to AIG, and the failure of their service can disrupting financial markets had scared Federal Reserve. $141.8 billion are being given by the Federal Reserve and Treasury Department. In return, they will receive 92% of the company ownership. As the result of the bailing out, the government had made profit worth $20.1 billion. $18.1 billion had been paid to the Fed due to interest, dividends, and capital gains, while $17.55 billion had been gained by the Treasury as capital gains. However, the assistance provided under TARP that amount about $12.5 billion could not recover, resulting the net profit for the government worth $20.1 billion. Finally, the pandemic of COVID-19. the pandemic that caused the limited of economic activities and a bad employment when people around the world need to stay at home for preventing the disease from spreading. The Coronavirus Aid, Relief and Economic Security (CARES) Act had been signed by President Donald Trump on March 2020. The act provides more than $2 trillion, including stimulus check payments of $1,200 for adults and $500 to dependent child. At the end of 2020, additional assistance funds are provided to qualifying adult or dependent children worth $600 per person. On 11 March 2021, the American Rescue Plan Act became law once President Joe Biden signed the act. The third stimulus amounted $1,400 for adults who are qualified and each of their dependents based on the act. Many of the provisions that had been included in CARES Act had been extended or amended, including a pause for interest of federal student loan and additional weekly unemployment worth $300 until 6 September 2021. In total, the American Rescue Plan amounted $19 trillion.
Next, I will explain about the current status of inflation and unemployment rate in the US. Before I explain the current status of inflation rate in US, let me tell you a little bit about what is inflation. Inflation is the temporary increase of a national currency buying value over time. The increase in the average price level of a basket of selected goods and services in an economy over a period of time may be used to calculate a quantitative estimate of the pace at which buying power declines. The increase in the overall level of price, which is commonly represented as a percentage, indicates that a unit of money now buys less than it did previously. Price rise as a currency loses value and it can buy fewer products and services. This loss of buying power has an influence on the overall cost of living for the general population, resulting in a slowdown in economic growth. Economists agree that persistent inflation happens when a country's money supply grows faster than its economic growth. Inflation may be beneficial to a country, but it can also be detrimental. It depends on the circumstance and how quickly the situation changes. The annual inflation rate in the United States increased to 5% in May 2021 from 4.2% in April, outperforming market expectation by 4.7%. The US Department of Labor stated that inflation rose at its quickest rate in more than a decade in April, indicating that the US economic recovery has accelerated. The annual headline CPI rate rose at its quickest pace since September 2008, while core inflation rose at its best pace since 1981, thanks to low base effect from last year's coronavirus pandemic, increased consumer demand as the economy reopens, skyrocketing commodity prices, supply limitation, and higher salaries as businesses deal with a labor shortage. The most significant price increase was seen in fuel, 56.2%, used vehicle and truck, 29.7%, utility gas service, 13.5%, transportation services, 11.2%, and closet, 5.6%. The cost of housing increased by 2.2%, and the cost of food also increased by 2.2%. The Consumer Price Index is an important economic indicator because it tells you how quickly prices are changing. It's measured by the Bureau of Labor Statistics (BLS) each month. So, how the government manage the inflation rate? The US Central Bank is the Federal Reserve. The Federal Reserve's main goal is to keep inflation under control while preventing a recession. It does this through monetary policy. The Federal Reserve must employ contractionary monetary policy to restrict economic growth in order to manage inflation. To make lending more expensive, the bank will boost interest rates. The quantity of money and credit that banks may lend is reduced as a result. It reduces the money supply by raising the cost of loans, credit cards, and mortgages. The Federal Reserve has a number of tools at its disposal to execute contractionary monetary policy, and it only does this if it believes inflation is out of control. Open market operations, the Fed fund rates, and the discount rates are frequently used in combination. The reserve requirement is rarely changed. For example, when interest rates rise, loans become more expensive. As a result, fewer individuals are purchasing homes, automobiles, and furnishings. Businesses are unable to expand due to financial constraints. The economy is slowing down. Contractionary policy, if not used carefully, can force the economy into a recession. For two reasons, there are not many examples of contractionary monetary policy. First and foremost, the Fed wants the economy to expand rather than contract. More crucially, since the 1970s, inflation has not been an issue. What is meant by unemployment? When a person is not working but eager to work, they are said to be unemployed. Anyone without a job who is reaching out to connection about openings or looking for employment falls into this category. Unemployment is a contentious topic in many economies across the world, and many governments use the unemployment numbers to assess anything from economic stability to public contentment. In the United States, the Bureau of Labor Statistics calculates the unemployment rate using two independent surveys each month. The first one is establishment reports and the second one is the current population survey. The Bureau of Labor Statistics produces the employment report, which includes unemployment statistics for the month after compiling data with the current population position report and survey. The current unemployment rate in the United States was 5.8% in May 2021, according to the Bureau of Labor Statistics (BLS), which released its monthly report on June 4, 2021. This month's unemployment rate is 0.3% lower than in April, the lowest since March 2020 and lower than market prediction of 5.9%. As the country balances reopening with safety a year after the outbreak, unemployment is one of the most pressing economic concerns it faces. The unemployment rate hit 14.8% in April 2020, the highest since the Great Depression when government shut down the economy. While the unemployment rate in May 2021 is much lower than it was before the pandemic, it is still far from the pre-pandemic levels. The percentage remains significantly higher than the 3.5% recorded in February 2020 before the virus struck the economy. Authorities have been able to ease restrictions on businesses due to a continuous decline in the number of daily coronavirus infections thanks to vaccines, but employers have been complaining that they are unable to recruit enough personnel to meet rising demand. Unemployment fell by 496,000 to 9.32 million individuals, while employment increased by 444,000 to 151.62 million. Teenagers 9.6%, whites 5.1%, and Hispanics 5.1% had lower unemployment rates in May than the other major workers categories 7.3%. In May, the unemployment rates for adult men 5.9%, adult women 5.4%, blacks 9.1%, and Asians 5.5% remained relatively unchanged. In May, the number of those on temporary layoff fell by 291,000 to 1.8 million among the unemployed. This figure is down from the previous high of 18.0 million in April 2020, although it is up 1.1 million from February 2020. Permanent job losses fell by 295,000 in May to 3.2 million, but are still 1.9 million higher than in February 2020. The number of those unemployed for fewer than 5 weeks fell by 391,000 to 2.0 million in May. The number of long-term jobless is those who have been unemployed for more than 27 weeks fell by 431,000 to 3.8 million in May, but is still 2.6 million higher than in February 2020. The long-term unemployed made up 40.9% of the total unemployed. The labour force participation rate was 61.6% in May, unchanged from June 2020, and has been in a narrow range of 61.4% to 61.7% since then. In February 2020, the participation rate was 1.7 percentage points lower than it was in February 2019. The employment to population ratio remained unchanged in May at 58.0%, but has increased by 0.6% since December 2020. However, this figure is 3.1 percentage points lower than it was in February 2020. In an email interview, Robert Frick, corporate economist at Navy Federal Credit Union, said the economy is discovering new methods to do business and is hiring back people on furlough because of COVID-19 more quickly than predicted. On the other side, the rate of new hires is slowing and more employees are joining the rank of the unemployed for an extended period of time. The Federal Reserve predicts that the unemployment rate will drop to 4.5% in 2021, 3.9% in 2022, and 3.5% in 2023, according to the Federal Reserve. Unemployment is a contentious issue and no economist can agree on a simple solution. In the United States, however, if unemployment grows significantly, the government generally intervenes with particular programs aimed at reducing the overall number of jobless individuals. The US government has adopted two initiatives to lower the unemployment rate. First, there is monetary policy. The demand side of economic policy is monetary policy, which refers to the measure done by a country's central bank to manage money supply and accomplish macroeconomic goals that encourage long-term economic growth. In the United States, monetary policy refers to the Federal Reserve activity and statement aimed at promoting maximum employment, stable price, and moderate long-term interest rates, which are the economic goals set out by Congress. Lower interest rates are the most common type of monetary policy, as they boost the overall money supply in an economy by providing banks and companies more access to loans. The second way is the fiscal policy. Government agencies will move to fiscal policy if expansionary monetary policy fails to reduce unemployment sufficiently. Fiscal policy is a form of fiscal stimulus undertaken by a national government, and it includes infrastructure expenditure, tax cuts, raising the minimum wage, and unemployment compensations. For example, unemployment insurance. These techniques are intended to boost economic activity by increasing demand in the private sector.
Conclusion. Even though United States is the largest importer of goods and has a well-developed economic infrastructure, also had the third highest workforce productivity per person in the world, but the rates of poverty and unemployment are still at high rates. The poor people are still numerous. Thousands of people in this country are unemployed now. This problem has spread its evil grip all over the country, and everyone is getting worried about this. There are several types of unemployment and poverty caused by various factors. The appropriate policy to reduce the type of unemployment depends on identifying the underlying cause of unemployment. Expansionary fiscal or monetary policy is needed to be implemented to stimulate aggregate demand and to reduce unemployment. The government must act immediately action to resolve this issue. However, there is a suggestion for government to overcome unemployment in United States. The government must ensure that the unemployment receive jobs. Nowadays, everyone knows that having a job is a difficult thing. This is because even a university graduate with a diploma, degree, master's or PhD is difficult to obtain jobs because most of them also choose jobs. This is because of some of them are too concerned with salary or job position that causing many of them to end up not working. Whether they want or not, they should choose whatever job they get based on their qualification to find a job nowadays, or they should be unemployed and have no income to support living.